Hello and welcome to the Baby Giants Investing Podcast. Join us as we chat about the weird and wild world of small cap investing, all while searching for the precious few fast-growing businesses that have a shot at becoming industry giants. This podcast is for entertainment purposes only and is strictly not intended as financial advice. Any opinions are general in nature and do not take into account your personal circumstances, needs, or objectives. Securities mentioned are for illustration purposes only, and this podcast should not influence investment decisions. You should read the relevant PDS and consider speaking to a financial advisor before making investment decisions. Past performance is no indicator of future returns. Podcast guests and their clients may hold positions in the securities discussed in this podcast. We're live. Got Andrew and Claude in the house. Let's get into it, guys. Talk through some good news. Do you guys have any good news ready? Let me throw it open.
I lean on you for the good news, mate.
You're
my ray of sunshine each week.
There was a lot of good news. Let me just try and find. I had one about, what was it? All right, now I'm putting myself on the spot. I thought I'd saved it to my document, but I hadn't.
Jeff Wilson joined Twitter. That's good news.
Jeff Wilson joined Twitter.
Yeah, that was.
Yeah. Is that good news? I saw they got a write up in
in the AFR. Yeah, it's so funny because I don't even know if he's in character or if he just so perfectly is the boomer franking credit lover that it's indistinguishable reality or parody.
Yeah, self-driving semi-trucks coming to America's highways. I don't know if I believe that one that much. Yeah, there wasn't actually that much. I think that's why I hadn't added that much. I was hoping you guys had it. There wasn't that much good news this week that stood out. There's a lot of stuff about things that we've already talked about, like mRNA drug vaccines, etc. But yeah, not too much new news.
Not the groundbreaking stuff. We need another superconductor type, thing to get excited.
Did I mention the super banana?
No, hit me with that.
Okay. Scientists' super banana could save thousands of lives, reduce blindness, but it still has some opposition to overcome. So it's genetically modified banana to cure vitamin A deficiency in developing countries, where this is apparently 190 million preschool age children around the world have a vitamin A deficiency and can lead to blindness and immune system problems. And yeah, Uganda is one of the countries that's trialing this super banana.
Yeah, I'll sign off on that. I'm a big fan of public health, and it's really fallen by the wayside in the last few years, but I think it's a great force for good. And it's a double whammy because not only does it increase the population, which is a positive for people who think that's positive, but also it increases the enjoyment of the life of the existing population. So unequivocally good stuff.
Yeah. Well, I do wonder if it's one of those solutions that is like really just one small part of a much larger necessary solution. Like, so let's say you've got this plant and the banana is fantastic. The infrastructure and resourcing and logistic coordination of growing enough said crop to feed the kinds of people that you want to feed in some of these geographies is, there's a gap there. There's sort of like, wow, we've done this in the lab. I mean, this is like such the lesson of so many of like ASX listed early stage tech or pharma companies, right? It's sort of like, look, oh my God, look, we've done this in the lab. This is brilliant. It's like, great. Now let's make it work. It's like, there's a very high failure rate from there. So just to put a dark ring around
that's
that.
very helpful. All right. Claude, you got something? I can hear you typing now.
Oh yeah, I was just trying to remember the other examples of that, like iodized salt, right? That's an example of just, just making it, and just this little
fluoride
thing no one noticed it. Yeah, exactly. Yes. Yeah, that's a good one. But isn't there something that they put in a lot of breads as well that's good for pregnant women?
Yeah, folate.
That was what
folate.
Yeah, folate. Yeah, that's what it was. That's what I was trying to look up.
There you go.
Cracking.
Making us all take our vitamins.
Yeah. See, sometimes I guess that's benevolent Big Brother, right? Like,
I don't know. There's probably a lot of people. I don't know. A lot of people fired up already.
Yeah, there's like a lot of cookers that are like, fluoride in the water. That explains why you're all so crazy.
Don't get me started on the 5G, right?
Yeah. All right. All right. What's going on? No one knows if you're joking.
I know. I should just add that
you're a huge believer in this other orange coin religion. Who knows what the next thing is? All right. Well, speaking of Andrew, what have you been up to? You've been chatting to some companies at Strawman. You want to just give us a
sure.
on what you chatted to?
Well, we spoke with David Williams, who's the chair of Polynovo, and also a much smaller company called Inoviq. So, I mean, Polynovo is just, man, it's really quite impressive when you stand back and look at that thing. Like, it has 5 years ago, it was $5 million in revenue, and they're knocking on the door of probably do something like 100 million plus this year. Tipped into profit. For those that don't know, they have a synthetic skin kind of product, and initially sort of formulated and targeted for burns victims. But the fascinating thing, and David's mentioned this the last couple times we've caught up with him, is just the breadth of use cases. Like, it's being used as scaffolding and support things in plastic plastic surgery. And what I find really fascinating as well is like, this is not company-led sort of research. It's not their R&D teams that are saying, oh, you can do it, you can do this with it. There's sort of like frontline medical research with surgeons, pioneering new approaches using this product, which has got all their proper, it's safe in the body and it's been tested, etc. But with other non-intended use cases. And so this thing is just flying off the shelf. I mean, it was kind of a little bit dark as well. He talked about sort of like the benefits of the Ukraine war in terms of big demands coming from there. Also like a big secondary gray market with this stuff where it's sort of like imported and bought through Jordan, but ends up in other places. And the company just really has no clear idea on exactly where all its products going, other than and again, you'll see it yourself when you look at the releases. It's just like the stuff's just flying off the shelf. So it's kind of, the thing that's only held me back, and it's probably not done me any favors, is that I think it's like I'm 15 times pro rata sales, so it's up there. But they seem to be scaling reasonably well, at least recently, and the top line's like 60% growth, and they've barely scratched the surface. So it's a very fascinating one. I don't know if you guys have looked at it.
Yeah, I've looked at it a bit over the years. I guess it hasn't reached profitability yet, right? And it had been
in the half year they got a profit.
Okay.
Yeah.
What was the kind of grey market story, Andrew? I'm kind of surprised by that. Why do they need to? Or why is it going through grey market channels?
I got the sense. And look, David's excellent, right? He's really good. He's a very hands-on chair. He's very enthusiastic. He's a great salesman, right? And he tells a really good story. Yeah, basically it's just demand driven. It's just like people want it. They've heard of it. It's being increasingly written up in medical journals and, as I said, bespoke applications, and surgeons are just sourcing it wherever they can. So they've obviously got the formal channels and the agreements, but they just can't remember the specifics now, but just that, things get sold through certain areas and we see it end up elsewhere and we don't know. But, I guess the bull take on that is that it's just sort of like, well, that's a really nice issue to have, right? It was just sort of like there is demand coming from non-traditional sources, non-visible sources to you, just because of I guess what's the value that's seen in the product. And again, this is David. This is from the chairman. So maybe there's more wrinkles to that. But again, it just seems to be backed up by some very, very, very strong sales growth. And I guess the other thing to mention too here is that he always emphasizes the extraordinarily high margin on this. Like a lot of medical and pharma companies, the US is just such the obvious market. It's so lucrative if you get it right there. And that's the majority of their sales. But they've moved into India, Canada, and a whole bunch of other places. And they're seeing 100% growth year on year at the recent half as well. So we're seeing this sort of 65% top line growth compared to the same time last year. But within that, you've still got very high growth within the US, but much, much higher growth in these emerging markets. Currently a smaller portion of the pie, but growing very rapidly as well. And they've got some new products. They've got manufacturing is sort of a lot of capacity that's there. And by the way, if they do need to expand it, you're talking about I think you said $30-40 million capex. It's not like $1 billion factory that needs to manufacture this stuff. So I don't know, what's the high level view here? It's just like a product that's sort of crossed the chasm. It's gaining widespread adoption. They're now in profit. They've got a very strong balance sheet. Yeah, it's one of those ones where I look at it and I go, what's the problem here? And I guess if you want to find a problem, it's that value investor conundrum of, the market recognizes the growth, I suppose, and the growth potential.
Yeah, I'm with you. You looked at this one, Claude?
Yeah, I have. I think Andrew always falls for his guests a little bit.
A little.
It's always
guilty.
a glowing write-up. But actually, this one, I definitely, in terms of the comments that you made about how the company has come a long way, like it obviously is a innovative success story. Like, yes, you could argue about the price of the stock, but I think that actually this time it is a good one. Like, it's not like Weebit Nano. It actually has a product that is, in high
it's
demand.
In market, yeah.
And it's also, I think from even a few years ago now, the thesis for this one has been, hey, they have a product that is really good. Like, it's a new, better product from what was being used before.
Which was pigskin, right? Essentially, and other things. Yeah.
And that's why it's growing. And because that's the driver of growth, it's just going to keep growing. And that's definitely what you're looking for as an investor, especially a growth investor. Because when something's organically growing and it's demand pull essentially that's growing it, that's when you get essentially high returns on additional investing capital. Like, they might need to add another machine to their factory or spend a little bit more or something like that. But the incremental investment, the return they're getting in just satisfying that automatic demand pool, that's going to be really high. And that's exactly one of the features I'm looking for. In fact, I would sort of say that there's probably two kinds of investing that I like to do. One is a little bit more the buy and hold. Ideally, you're just sort of buying kind of proven high quality stuff that your edge is probably just that you're going to take a really long-term view, and whether the analysts are looking out 5 or 3 years or whatever it is, you're like, well, actually, this one's just one of those particular companies with a sustainable competitive advantage that's still going to be doing well in 5 years and 10 years.
Mm-hmm.
So I'm just going to look out further, essentially, and you can kind of get a little edge.
That's
like
where the
that.
mispricing often lies, right?
But then the other one is another source of mispricing can be when you have like good, really genuine organic growth that is, I guess, a little bit exponential in nature. And then you also have the operating leverage, which makes the profits absolutely exponential in nature. And then that, I think, Matt, you've talked about this before, humans sort of tend to sometimes underestimate how much things can change when you have a bit of exponential growth. So then, suddenly the PE ratio, at the moment, if you it had a 1 million, by the way, profit in the last half, guys. So it's hardly super cheap on the PE ratio. So it says here I don't know if this is accurate, but it would be approximately accurate. Is the PE ratio is 4,000 on ComSec. So it's like, over $1.5 billion company with $1 million half year profit.
Yeah. Looking at their slide, they talk about underlying net profit, but they're adding back depreciation and amortization to get that, as well as share-based payment. It's just a weird, you don't add back depreciation to get profit.
Definitely not. There's a lot. Actually, I was looking even at another company, a much smaller, worse company that's not even profitable at that level. And it's you see it a lot, obviously, is companies that are just talking about their operating or basically made up profit, which has nothing to do with their actual statutory profit. And I don't think, it means you can't invest in them, but you just see it much.
Yeah. It's just, a lot of companies do it as well. It's not necessarily a massive signal if it's clear what they're doing.
But the ideal situation for the first category I was talking about, proven good ones that are profitable, blah, 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 they don't tend to do that. They tend to actually have a real profit that they can talk about.
Yeah. And I think the super hard thing for us as investors is teasing apart the growth CapEx component of, or not even CapEx, just growth spend cost component of that. If they just said, right, we're getting rid of the rest of the world, we're just going to focus on our established markets, we're going to pull back on the R&D. It's one of those ones where the net margin was probably 40%, something like that. And that's the tricky thing, right? So it's sort of like you're going to get, and arguably should get, really crazy PEs at this. As I said, this is a very young company, right? $1.5 billion market cap. It's still a minnow, right? It's sort of, that's what's going to deceive you, I think, is teasing it apart. Now, I'm not saying that they should cut back expenses and focus just on profit, because that, I think, over the duration, that will lead to much less cash flows attributable to shareholders. Do you know what I'm getting at? Like, this is, again, they've only recently gone into some of these other jurisdictions, and they're doubling sales year on year, admittedly off a small base, but with long potential runways to go, with the reference sites in some of the biggest, most established markets. Like, yes, spend. Like, if you need someone to be on the ground in wherever to get this stuff through the door and become established as the platform that you want it to be. That's the other thing I should have mentioned. In fact, David was sort of talking about, when he is in pharma, what he's really looking for is platform companies, those that can sort of, it's not just a specific use case for a specific thing, but something that can be used in a whole variety of different operations, which might be a bit of a segue to Inoviq as well, which is a very different company. It's basically on cancer diagnostic tests, basically where instead of doing, for example, mammograms with breast screens, you'd just do a blood test. And ideally, as David was saying, part of just the normal bloods that you get done when you go see your GP, they can, the promise here, and they use something called exosomes, just sort of like cell membrane protein kind of things, but you can allows for very highly targeted treatment and identification of early stage cancer cells, is that you can get very early and accurate and cheap sort of detection. But it's nowhere near the stage of development yet. And so it's far more in the speculative basket, but has that same kind of potential in terms of broad use applicability, the ability to build it as a platform. So it's now detection. There's a mechanistic sort of detection model in there that can be applied to all different kinds of cancers, and potentially outside of the cancer realm as well. So big blue sky potential, as often as with these cases. But it is, again, at a much, much smaller potential. And he kind of hinted, the sense anyway, that M&As and other kinds of things like that may be on the horizon. So we'll see.
Would the M&A be to grow scale, or what was the hint?
He
M&A
lamented
for
that there was a
Inoviq.
lot of unnecessary duplication and stuff in the Australian biotech pharma
Right,
sector.
okay.
You know, there's like all these people doubling up on all of this kind of. There's just a lack of economy of scales that you might get in places like the US.
Right.
I mean, that's the argument. Whether that's going to be good for individual shareholders and individual deals, I'm not particularly sure. But yeah.
Yeah, interesting. Had you come across that one at all?
No, never
It's
heard of
pretty
it
small.
before. One of
Yeah.
our members presented it to me and really bullish on it. I mean, there is something to be said for following people who have got somewhat of a Midas touch, and David has arguably. Like he bought Tassel. There's a whole other story there, right? And had a pretty good deal and turnaround on that kind of stuff. So he can be pretty mercenary when he needs to be.
He's definitely a good investor. Like I remember years ago, I can't remember who he bought it off, but I think it was like a fund exiting some SDI shares, that like dental products company.
Yeah, I had.
And he bought a chunk of them, like 5% of the company or whatever. I'm like, I can't remember what I talked to him about, but I reached out to him at that point, and he was like kind enough to have like a pretty circumspect little conversation. Didn't tell me much about his thoughts of the company, and then like I don't know, a year later or something like that, he sold them for like close on double the price. Just I guess because the market had bounced up a little bit and feeling more positive or whatever, and he banked a pretty good return, like definitely for the holding period, and on a decent chunk of shares as well. And also on top of that, I reckon probably the sell was pretty good either as well, because all these years later, SDI has never really become sort of a compounder in any way.
No, it never really lived up to its potential, did it? Although it always seems to be threatening. I mean, not to change topics, but it does always seem to be threatening to be on the edge of growth. Getting rid of that amalgam drag, pivoting more successfully into these higher end. It always just seems like they're a perfectly viable business, just never getting the growth that is promised.
I reckon the David Williams style trade on SDI makes sense. Like it's a pretty illiquid stock, maybe, but it's like has continued on as a business for quite a long time.
I did very well out of SDI, I should say. It's one of the few ones where I bought low and sold high, and
yeah. So I think maybe if you're getting that when you're on a 4.5%, 5% dividend yield, or sort of the kind of yield where if you're kind of just sat there and you just treated it like it was a term deposit or something, you'd kind of be happy enough with it, or even maybe do a bit better than a term deposit, and then wait until there's a little bit of excitement in it or whatever. The every 3 years there's like the value investors that are in it manage to convince everyone that there's like this great growth story or whatever, and it like goes from 13 times earnings to 15 times earnings or whatever, then you sell.
That's the trick there, right? You got to bank that one. It is not the bottom drawer kind of sort of play. But yeah, just on what I was saying before, are there other sidecar type investments that you think are there people on the ASX or associated with the ASX that when you see that they're involved in it, that you would go, at least it warrants a closer look? I know neither of you guys play in retail, but if a Solomon Lew was involved in something, or a Brett Blundy, or are there any other names that you think were, at least for you guys, I think it's an interesting question for the listeners. Like when you see that, person X is somehow involved in this company, that it warrants a closer look?
I mean, yeah, but I don't put a huge amount of weight on that kind of.
No, but I'm not saying that you just ape in because, such and such is buying, I'm all in. But I just sort of mean, okay, I'll have a look at the company. Is there anyone?
Yeah, well, actually, I'm going to publish an article probably sometime this week of like, I guess, 5 small cap funds that I like. So I read the reports of various small cap. I read the reports of probably dozens of small cap funds, but there are probably like 5 or 6 of them that I like particularly pay attention to or like to get some. I genuinely do. I'll wait till the article's out. I'm not going to say any names.
It's a teaser. Okay.
But yeah, like there's that, and then there are other names that come up. Even weird private investment companies. Like I'll tell you one out of left field or whatever. I don't know. I haven't seen it for a while actually, but I think is it Rubicon Holdings or whatever. It's like a rich. Do you know the one I'm talking about? No, it's not it. That's the name of it. I see. It's like the proprietary holding company of the founder of another listed company, but I can't remember. Just like you see it in all of these little tiny small caps. It wasn't Rubicon Water. If that's the one you're thinking of. There's like a proprietary limited company. I can't remember what it's called, but you always see it in like top 20 of all of these little nano caps or whatever. And yeah, there are other little ones like that are just sort of out of left field that happen to be private investors, and I recognize them when I see them. and it sometimes makes me, take a closer look, essentially. And annoyingly, funds, so you can't do that with funds because the funds will usually have a trustee company that's the holding, so you can't just look at the shareholders and be like, oh, that's such and such a fund. You kind of have to wait for their reports.
Yeah, I think you named a good one, Brett Blundy, and it just depends on the industry. There's probably a few others. Yeah,
Bevan Slattery.
Yeah, interesting one.
I feel mean for saying that. No, I don't. I thought there are just certain names that I know that you speak to other investors.
He was very hyped a couple of years ago, right?
Yeah, he was, right?
He touched would like 10x. Yeah. No, I think it's a good idea anyway. It's good in the US. It's more popular, right? Because you can track all of the funds reported, like what they own.
Yeah,
they'll have to report. It's like Whale Wisdom and other sites like that. So yeah, it's a whole strategy of kind of following others' coattails. That I think can work.
I mean, it's an interesting data point. Is that someone who I respect and with a track record likes this? That is enough. I would imagine that you would go, okay, well, I'll look at it, right? Well, otherwise, I might have gone, no. We do that all the time. Just heuristically go, oh, it's a such and such. I'm not interested. How many opportunities have we all missed because of dumb heuristics, like surface level sort of glances and then a dismissal? But that can sometimes probe you to, or encourage you to probe further.
Yeah, it's a good call.
Are there investors that if they're on the register, that makes you look away and not like them?
That was the next question. Yeah.
There definitely are that as well, but no one's going to say what they are.
No.
Let's just move on.
Sounds good. Well, some other news that caught my eye. It's a few days old now, not that long old though. Is just some of the latest developments with Cettire, and it's kind of fascinating because the AFR wrote this piece about Cettire a few weeks back about questioning whether they were paying all of their kind of sales taxes in different areas and whether they'd been paying them in Australia was kind of the AFR's question, whether they'd been paying them overseas, and then it kind of sparked. So that article came out and Cettire kind of answered it, but it's kind of sparked some other independent writers, and it's got this interesting loop where you've got these, I guess, independent anonymous accounts on Substack and Twitter. One of the bigger ones that I'd started reading was Tax Loss, who had written a few articles and had gone and basically bought some clothes, sent to an address in Texas, and then tracked, how much kind of state sales taxes should be collected, and then kind of looked up some of the entities and wrote a lot of interesting stuff. And now you've got kind of this loop where now the AFR is writing about the work that those, I don't know what you'd call them, independent researchers, anonymous researchers have done. And so then now the AFR is kind of onto it and they're following up on it. It's just creating this interesting loop between, some of the best investigative journalists like Johnny Shapiro and kind of, I guess you would say, like crowdsourced independent analysts doing their own digging. Yeah, I don't know if you guys had come across it, but it seemed like some interesting
Didn't I send it to you?
Not the latest. I don't know if have you read the one that was on April 3rd or?
Yeah.
I actually think there's better quality stuff out there in, I don't know how you frame it, just in the blogosphere or whatever, than there is in traditional media, frankly, with a lot of this kind of stuff. There's people who just nerd out and go deep and just put it out there. I think it's brilliant. Again, it comes back to the earlier discussion of how do you separate the signal from the noise? But that was a great article. That was some really good research, I thought, and I feel like a lot of probably this bit of the secret for a lot of journalists is like they've got their people that they track as well to sort of use as their kind of leads. I just wish they had better resourcing and more rope to sort of pursue these things.
The secret sauce here is anonymity.
Yes, that's
so Tax Loss is anonymous. Like I first got to appreciate that person when we were both looking at I Sign This at the same time. I think that one of the reasons that I don't want to keep writing about stocks forever is because you get to a certain point and start saying anything critical, and in Australia people just start threatening to sue you. And we don't, in America they have like protected speech, so there's sort of free speech and you're allowed to say something, but in Australia we don't have that. It's a huge issue for people that might want to like criticize listed companies, which is clearly a good thing for capitalism, right? Like it's clearly good for everyone as a group. We all win if there can be scrutiny on whether a company is paying tax in the right way or not. But most people can't do it because if you're not anonymous, then you get threatened into silence essentially. And that's why like there are few people who can speak. You can be anonymous or you can be the AFR where you've got all the might of a company behind you to defend the defamation action, and still then you might be dragged through it
or disincentivized to have to defend it potentially.
So yeah, I think I've got a heap of admiration for Tax Loss. Like those kind of people are inspiring to me, but at the same time, I don't want to do it. Like, I need to be able to just... what I've realized in the end is, like, we as a society, as a people, we don't deserve tax loss. Like, we are undeserving. Like, there shouldn't be people that have to, like, do this work. This should be something that is celebrated and not something that has to be, like, hide behind a Substack or a Tumblr or an anonymous Twitter account. Like, we don't deserve that effort that these people are making. And they might tell you, oh, you know, the John Hamptons of this world will say, oh, I'm just doing it to make money, you know, it's my business. But, like, you can tell from, like, the situation, like, if you actually ever walk down that path a little yourself, you have to realize quite quickly no one does that purely for profit. Like, they do that because out of a sense of, like, what is right and what is good, because the payoff's not worth it. There's no real payoff other than it's the right thing. So it takes a strange type. We're lucky we have these people, but as a society we do not deserve them.
It's like being a whistleblower, right?
Yeah, exactly. It is like that. And it's a completely asymmetrical bet for those people, where they take a ton of downside and they don't really get the major benefit of the work they do. Like, actually it's the society and the market and the AFR that benefits, or the readers of the AFR once you're, like, getting filtered down 3 levels. But, you know, it is what it is. Like, I can't wait to stop being part of this dumpster fire, because there's no ability for a free and fair market when you, like, absolutely, like, make life so uncomfortable and dangerous for people who want to be critical of companies. And yet someone can go out there and just blow absolute smoke, just utter rubbish on the positive side, complete, you know, companies with no product, no revenue, no nothing, you know, can, like, give the most bullish prognosis for themselves for the longest time, and no one ever there's never any ramification for that. So it's such a strange beast.
Well, that dark topic is a good segue for end times investing. Gone to a dark place already. We got an email through from Charlie, who heard our podcast a couple of weeks ago, where said, Matt referenced an engineer made a reason case the world to fail miserably to hit its Paris Accord targets. He said, well, last year we actually hit 1.5 centigrade increase. Business as usual is over. Sadly, this is an inflection point of the wrong sort. He wrote quite a detailed email, so I won't read it all. But he's talking about basically this idea of investing in things falling apart. End times, I guess you could see whether it's how far you want to go down that and what way you want to take that line of reasoning. But yeah, I guess the idea that things maybe falling apart, I guess his was mostly focused on climate and global warming and how to, you know, I guess position a portfolio for that. He's talking about, you know, brambles is, but then what happens is ports become more threatened by rising sea levels, etc. But anyway, you get the idea. What do you guys think?
You want to go first, Claude?
Yeah, like buy some land that has its own water source. Make sure you have, like, a strong group of friends who you can trust, who know where the land is. Go and live there with your families, so that you know how to, like, live in this place and what needs to be done, and
guns,
stockpile
lots
antibiotics. You're definitely going to be wanting some booby traps. I think.
Have you still got your land, Claude? Maybe.
No, I sold it. That's what I sold. That's what I banked the profit on it.
Okay.
No, because that land was too far away.
Yeah, you're too optimistic now. You've become optimistic, clearly.
I think you want it, by the way, don't you?
No, because what I realized is, so originally when that land would have been good if we'd actually gone and lived there, but we didn't go and live there. So what I realized is you need to have something that's, like, close enough so that you can be in the habit of going there and living there and having all your friends there. And I also realized that what is more important than, like, the land or whatever is the people. Like, you're much better off to be somewhere where you can go and retreat to some land, and also the other people that are coming there are, like, your 20 closest friends, like, people that you, like, truly trust.
And their 20 closest friends, and then their 20 closest friends.
What's
like,
the capacity?
Things get real in that scenario.
That actually would be strong. That would be a good odds of survival, because, like, if you actually had land and had infrastructure and land, like, it's not going to go on forever. But if the people were selected by trusted friends and their friends of friends, the quality of the people you would have way more chance of gelling together, working together, and having each other's backs than in most situations.
Yeah, but dude, the most competent, trustworthy person can rock up, but they're rocking up empty-handed, and my store of 2-minute noodles is getting low. It's like you can keep walking. I've watched enough zombie apocalypse movies to know how this goes, right? It's sort of like
you just keep on walking.
You keep on walking. Right? You look after me and my own here.
If they haven't if they haven't been like, you know, inculcated into the group, then they're not going to get close enough before the booby traps just take them out anyway.
Okay, cool.
Like, keep on walking. It's more like you just come upon them like 3 weeks later, and you're like, ooh.
So are you looking? Are you in the hunt for another place, Claude? Now that are you shopping around for a new bunker location?
It's not at the top of my to-do list. No.
You're getting more optimistic, right?
No, just
so you got to read it.
more that I spent all my money on two other houses, and now I'm like, oh dang it, we're down to 0, guys. So yeah, maybe like when I like find another Pro Medicus map, that'll be the next.
Mm-hmm. Okay, cool. What do you reckon, Andrew?
I mean, it's a question of degrees. Like if you go far enough along, if you slide that slider far enough along the spectrum, it really is a shotgun and a pack of baked beans. Like that's kind of where you get to. So I'll say that it's more of just a very difficult time economically, and that, you know, humans continue. And I think, honestly, I go Woolies if I was like talking about listed ASX companies, like something like that. And then I think it's about as good as it's going to be, even if it really just proves to be a store of value as opposed to something that's going to give you real attractive CAGR over time. I definitely would avoid insurers. I don't think that would be a place I would go to. I would definitely avoid things like,
because they have so many losses. Basically,
the models are broken, right? Like at a point, life insurance is like the best kind of insurance in a lot of ways, because like actuarial numbers are much more reliable. Climate models are models, and they can move, and like, you know, someone forgets to carry the one somewhere in the whole. Insurers are incredibly thin margin businesses, you know. So it's
life insurers have a tough spot though, because for years and years and years, life expectancy just went up and then it started going down.
Yeah, and very competitive too. So that's, yes. So not that I'm a big fan of those either, but yeah, I don't think I would go anywhere near insurers. I would want, basically, I really do think when things get dark enough, you want to get to something that your focus shifts from, I want to generate an attractive real return, to I just don't want to lose my value. I think so. Land, I think, is a good one. In fact, in that circumstance, I think you've got to play it through some various. There's second and third order effects here. So if things got really hard, what's that do to us as a society? Well, for all of a sudden, government revenue plunges, right? Because tax receipts fall, corporate tax, income tax, that gets really bad. And at the same time, when there's a lot of political encouragement for spending. So you can imagine that what happens in a scenario that is like that is going to require, or at least the public is going to demand, a huge amount of public spending on stretched balance sheets and on budgets that don't balance very well. I just think you get an incredible amount of stimulus. And I think under that environment, value is going to try and flow into things that are more difficult to debase.
Okay.
Land, and you know, yes, okay, Bitcoin.
Yeah,
I'll just say
land and
Bitcoin.
Yeah,
right?
I agree.
Like 100%, like 100% Bitcoin.
That's what my thing was. Land. I think land is land is the ultimate one.
Yeah, but it's the character. I don't even want to talk about Bitcoin. It's the characteristics that are important here. So something that is going to be less scarce than the thing that is being sloshed around to try and sort of coordinate, measure everything. I think that's a really easy argument to kind of make. It tends to have been the case in other sort of dire economic conditions. It's the harder assets that tend to do better. Not necessarily in real terms over very long periods of time. You don't want to have been someone who held gold from 1930 through till today. You've actually preserved your purchasing power, but you've got no return whatsoever on that. But my point being is, in those, I think money seeks shelter in those environments. But
also the shelter to me is like the big US companies, like those almost like monopolistic ones like Google and Microsoft, and like or whatever's happening, like they're making money.
Yep. And we've seen, well, I reckon you can argue we've seen a degree to that. The massive expansion we've seen in a lot of the multiples that are out there. There's a monetary premiumness to those assets, where it's just sort of like in a world with very high inflation, and
I
the
have
various
actually
issues
been.
that we've got. People store their money in Nvidia, right? And you can look at it all you like with all your DCF models and go, yeah, but that's going to give me a really ordinary real return. It's like, yeah, I don't care, because what I'm not leaving it in the bank. I'm not holding US
I
treasuries.
still do
I'm
like
not,
tech and healthcare. No matter no matter which way I play it, I do end up mostly like I have a fair in my US portfolio. I have like some fairly idiosyncratic stocks, but like at the end of the day, the biggest positions are Alphabet and Regeneron.
Nice. What about you, Matt?
Yeah, I mean, I guess coming back to the premise, I probably disagree with probably you guys. I don't know. I don't think that I'm not that concerned about like a calamity for Australia in the sense that I think Charlie's question might have been. Like, I don't think the kind of climate change that we are on track to have is civilization ending. I think it's something that we start adapting to. And I mean that particularly in like wealthy countries. So I'm not saying it's like not a serious thing, and it extracts costs, but I think society adapts like amazingly well to stuff. And you can look at like the Netherlands, where I think I'd mentioned before, is like 50% of the Netherlands is below sea level. That's been like that for hundreds of years. It's not because of a global warming thing, but they just adapt to it and they change the way that their society runs. And so I guess that's the first lens. I'm not, and you know, people can disagree with me. I don't think for a wealthy country like Australia, it's something that you should be extremely fearful about. I think it's something that has negative impacts, as you talked about, like flooding, but we can change the way that we build our cities. We can change the way to adapt. When I lived in Denmark in 2011, the suburb I was in was already preparing for climate change and how they like built the suburb. And I think that it's very capable. Australia's
Yeah, but Australia does not forward plan, my friend. If there is one thing I can tell you.
Yeah, I think we've gotten off track of it, but I still
look at
think
the
Australia
houses
is
we've
very
built in the
functioning.
floodplains recently. Like, that's all in the media at the moment. It's like, who would have thought? You know, we
Yeah, it's
built
pretty
these
wild
estates.
how many houses are in floodplains. But this is, again, these are pretty simple. Like, that's a really simple thing to stop building in floodplains.
But should we simple ideas for that? Like, so there's the classic one for that is John Lynn's group, right? Because correct me if I'm wrong, because I'm not totally across it, but it's like the idea is that's partly owned by one of the insurers or something, or insurance broker network or something, or both. I can't remember now.
What do they do? Building repairs for insurance companies.
Yeah. So hypothetically, you know, there's another flood in Brisbane. Surprise, surprise! Everyone who got flooded last time gets flooded again, and then they have to go and rebuild them or whatever. And that's heaps of work for these guys. So that's the typical thesis for that one. Obviously, there's one that you and I are both partial to, Matt, which is that, well, actually what happens is the insurance prices just keep going up. Now, that's not so fun for the insurer because they have to pay more and more. But for the guy clipping the ticket, on the insurance policies, that's a tailwind, right? Because people think of the insurance broking commission as a, you know, probably relative to the overall spend on the insurance. So hence I own PSC insurance, for example, and still quite like it.
Maybe we could do a deep dive on it another week. But I think the insurance brokers are pretty interesting because, for anyone, if we haven't covered it much before, they don't take in any of the risk of insurance typically. They are just selling the insurance, kind of being the customer facing layer between the insurance company taking the risk and the end user. And they take a commission for that, which just grows basically as the premiums grow. So as you're saying, Claude, if the cost of insurance, like the cost of insurance has gone up something like 50% over the last 3-4 years of insuring their house, if I believe I have that correct. It depends which area you're in, I guess. But so they basically have a higher premium that they're taking a commission on. Doesn't really affect them negatively. It only affects them to the extent that people stop being covered for insurance altogether, which is something that is already happening definitely in certain places which are prone to these things. If you get flooded 4 times, maybe no one insures you, So I think that's a risk to think about, but that's one that potentially benefits.
You'd hope for the stability of the system that no one insures you after a certain amount of times.
I guess insurance brokers also potentially add more value because everything becomes more complex in that world. So you need insurance is an incredibly interesting, ancient, complex game. It becomes more complex in that world.
And isn't there already a bit of a niche, for example, in these areas that are, I guess, more prone to fire or flooding or whatever? And then so some people do start, I guess their niche is, we're going to check your street. Like, are you on the top of the hill or the bottom of the hill? I guess is like they're getting more specific.
Better and better data. No, that's 100%.
Yeah.
And that's happening at both insurance and some insurance broker levels. Yeah, sorry, Claude, to cut you off. If you had some more to add on some of those ideas.
I'll just finish the thought, which is like, I basically, I think that a lot of these things, like say Bitcoin or insurance brokers or whatever it is, like I guess the interesting thing is as things become chaotic, a lot of things will like benefit until they break, essentially, was the final point I wanted to make. So I think probably if I think of investing in the Armageddon kind of thesis, which I'm not saying, by the way, I particularly do, but I do also see why you might want to have some of that kind of thesis in your portfolio. I guess what you're looking for is stuff that benefits before it breaks, but I guess also it's probably worth noting that you probably want to be selling it before it does break.
I want to clarify too. I'll push you a little bit here, Matt, because the question wasn't how likely do you think this is to happen? The question is how would you invest if this were to happen?
Yeah, I just want to frame it like I don't think we're going to meet any of the climate targets, and I think we're way off. So I'm like I said last time, I think it's like 99% chance the world doesn't meet the 2030 target. So like way off, right?
Yeah.
But that doesn't mean I think 99% chance of the disaster. Like my percent of disaster would be much lower.
I'll double down on that too. I'm not.
Might be 1% chance of a disaster.
Yeah.
Kind of
as
thing.
much as I joke, I don't really. I'm not prepping for any doomsday scenario.
Yeah, and I just want to make that clear because there's a lot of people that are kind of like I've just chatted an investing friend in the US who's like preparing for getting a bug out bag and going. I don't know. That's
crazy.
All Americans want to like get a bug out bag and go to the woods. And it's like imagine 300 million other Americans all arriving at the woods with a gun and a backpack of food. Like, how do you think that's going to go?
Exactly. That's my point. It's like you want to plan, get out of America, guys. Like, get away from the guns. Like.
But yeah, so I guess the cool thing I'm saying is like, so I think civilization will go on. I think we could handle way worse stuff. Like we've handled it before. We've dealt with ice ages. Like our civilization, our species survived ice ages. Like we got down to just a few thousand. Like we can handle this so much better with technology.
I don't know. We got down to how many people?
It did take 10,000 years. It was a rough time. We got down to
like a couple thousand people, but we made it through, and we didn't even have any technology. This is like cavemen dealing with ice ages. Like I think we could deal with it. So vastly
I mean, that's not winning though.
I think a lot of people die.
But like so let's say that it costs 1% of GDP. Like that would barely be noticed after the first year of you paying 1% of GDP. And that's a huge amount of money to do this.
Yeah.
I want to believe what you're saying, but then the other part of me is like, but actually what happens is instead of spending a 1% of GDP in that, we start, Russia's spending all of its money trying to like psyop us and invade its neighbors and like, it sort of actually like degenerates to this more like atavistic state of humanity where instead of being like, hey, we could just like divert a little bit of our immense wealth to solving this problem, it actually becomes about let's go and like try and kill each other and take each other's stuff.
It can
and all
go
that
bad.
kind of
I'm
stuff.
not saying it can't, but the other thing, there's an article I read a while ago which talked about is like stop expecting the world to end, and it just talked about how during the plague in Europe, when we lost like 33% of the population, everything kept functioning. Like all the tax system kept working. People would like, they didn't even have germ theory then, right? And like a third of people died, like huge amount of people were sick. Everything kept functioning. You can kind of see it in all the records for.
Yeah, but how did their investments portfolios go?
No, but like, probably not good at it. I mean, investment portfolios did fine during World War II when 65 million people died, right?
The plague led to a huge rebalancing of how much like the workers got paid, right? As well, because
it led to an incredible flourishing. But that's kind of my point. Like you start off with this thing thinking this is going to wipe out humanity, and it actually makes us stronger. Like I just think we massively underestimate how much we'll adapt to it once people get serious.
But I mean, that's like the species view, though. Like I agree with what you're saying, but what you're saying is like the species view of it, not like the individual view of it. Like,
Matt, it's about my portfolio, dude.
So
let's just be clear here.
The pivot to portfolio. The pivot portfolio. I think what matters is adaptability and quality, because I think in quality you tend to not be as affected by everything that happens. The low quality one, the one that's like a really highly indebted company, gets wiped out before it can adapt to it. And so that combination of things, and then we can talk about some specifics, like Claude mentioned, the people directly touching this, like insurance brokers and repair companies. I think if we start investing more in adapting, then there's probably a lot of different adaptation companies. So I guess my mind is like, it's very easy to get sucked into all the negatives, but if you're going to make money, you don't just want to, there is an angle to just buy Woolies. I'm not saying that's bad, or to buy gold and defensive, but there's going to be immense opportunity from any change as well.
Yes,
for people because the world will keep turning.
Yeah,
Yeah,
no,
that's
I
my
agree with
choice.
that. Yeah. It's a nuanced discussion, is what we're trying to
It
say.
is.
I do
Yeah.
also think that like the sort of this concept of adaptability is interesting, and I have often tried to incorporate that in how I think about, you know, whether a company is a good long-term investment. Like I think, you know, years ago I wrote some sort of somewhat far out there but articles about how I thought that Audinate was a very adaptable company, but just being that little protocol, and it doesn't matter what happens exactly in terms of that whole space, the AV space, and the different things that come out and the systems that get built and the way it gets used, as long as they're talking to each other using Audinate's chips, it's extremely adaptable company, however it ends up
Yes.
looking long term. And you know, if
Oh, I
only
agree.
I'd taken my own advice and just been like, yeah, this it scores highly on this one point, and as a result you want it in your portfolio, like that was probably the insight I had. But I think, you know, I get too inside my own head and start thinking about valuations, and then it ruins my investing. Whereas sometimes actually, like, you know, a company scores extremely high, and I call them an adaptive enabler. It's an adaptive company. Whatever the industry starts looking like, it still adapts to that perfectly, and it is enabling other businesses to grow. And that gets that really beautiful, I guess, transaction-based revenue. Like Pro Medicus has it, Audinate has it. Tell me who else has it, guys. Like, while I'm on a roll, like, because sometimes I think, oh, I could just dumb down my investing a lot and just be like, I'm just going to try and buy these adaptive enabler companies that automatically just fit in with however the industry grows, whatever the future looks like, and they're enabling other people. So as other people grow, they get more revenue. It's that demand pool. They don't have to market really hard to get that incremental sale. And so honestly, like, I would be willing to, and I think you could argue that I already do, essentially bias my portfolio massively to that kind of company. And in some ways, probably that means that I've ended up holding or buying companies that are a bit too expensive. And then sometimes that doesn't serve me so well, but then other times it does pay off. And that's still kind of where I land with that.
Yeah.
The other category we didn't mention much was defense companies. There's a few on the ASX. If we're just narrowing it to equities in the ASX, and in this context,
Yeah.
there might be some opportunities there in a
Yeah,
less
that's
stable
true.
world.
Yeah.
They've not
And,
traditionally been great. Let's be honest.
Yeah.
But we've discussed it on the pod before with at EOS and others. But I got some Drone Shield shares.
Mhm.
You know, I'm happy to say there's others that I think potentially have a bit of a tailwind in that kind of environment.
Yeah. That's definitely a fall apart bit. I guess energy, I think.
Oh, energy.
Yeah, I think
Yes.
I mentioned nuclear before. I don't really see much that's that investable because a lot of them hadn't even been producing in Australia. It was all very speculative. But like some of the nuclear as a solution to it, some of the energy problems. But there's a lot of different stuff in energy that I think can be quite interesting during this time. And yeah, if you're thinking of things going badly or not investing enough, those are the type of, what would you say, commodities that benefit basically, right? Because they're continuously being used up. If there isn't enough investment, then the price spikes and suddenly they're making a lot of money, like coal companies did during 2022 when there was the Ukraine invasion, for instance. Anytime there's dislocations, those companies could do very well, potentially, anyone in that chain.
It's an excellent point. One final point I want to make too is to round this off is that the trouble with this outlook is that you need to not only be right, but you need to get the timing right. I mean, how many people do we know that like since 2004 have been waiting for this to happen? And let's say it happens next year and like things get real and the market drops 50% and stays there, you still would have been better off investing through that period and copping the loss at the end rather than just sitting in, you know, cash or something like that. So it is, I don't know how bearish I would have to be to really deliberately shift into this extraordinarily defensive posture, because being early is very much the same as being wrong in this context.
Yeah. Just in the article I was reading about preparing for the end times from Tom Morgan that I was mentioning before, he mentioned Argentine goalkeeper Carlos Roa, who quit soccer to prepare for the end of the world in 1999. After his sheepish return from the mountains, he never quite restarted his career.
Sheepish return. That would be hey, you're back. Oh yeah, you know.
I remember when 2008 happened, I was at uni at the time. I was writing, funnily enough, like a paper about financial crises. That's what I wanted to write my research paper, the dissertation on. And the lecturer actually said I wanted to write about the 1930s and the Great Depression. And they said that's like too irrelevant. That like, you know,
wow.
it's so funny. And if I wish I'd done it, because I got kind of like pushed out of it. I wrote about 1997 instead, but it's like came very relevant like 6 months later.
We forget the lessons of history at our own peril.
Exactly. But yeah, I had a friend there who got really into that at the time and talked about how basically how much more the market could crash, because you kind of like, it's basically looking at how much of these assets are just pumped up by whatever liquidity, and he's just like, it's all going to come down. And it turned out he was wrong, because we just kept reinflating it. You can say whether, why he was wrong, but it's just how hard it is to get out of that view once you're in it and start thinking productively again. Because I talked to him like a year and a half later, he's like, that's all going to come down, and that was like 2009, 2010, and you've missed, like, it's been a lot of good stuff since then. It's like 14 years.
So hard, because once you reach a conclusion like that, your brain is going to be incredibly good at noticing the six white doves, so to speak.
Yeah, the reticular activation system. Like, thank you. Like if you're looking for a yellow car, you buy a yellow car, suddenly you see them everywhere, kind of thing. Like
everywhere.
That's for the doom. Yeah.
And
so now we've got this. Yeah. It's even worse now because we have Twitter, right? Or social media algos, whether it's TikTok, whatever. It will just feed you that thing that you've already believe in, and you're like, yeah, and you click on that one, you're like, yeah, it is all this.
Absolutely.
Yeah, it's pretty wild.
Really hard. It's really, really, really hard.
Yeah, and I guess a recent one for me though was Europe. Like everyone thinking Europe's going to freeze to death because there was suddenly all the Russian gas got cut off, and it wasn't good. But just that's kind of what I'm getting at, is how much you can muddle through. And industrial production was down, and energy prices skyrocketed, and they did a lot, but they got through it. And that was a very short notice one. So anyway, that's kind of, it's like more focusing on, that's where I want to focus my energy, is on who's adapting to it, like being aware of the current reality and taking who's like adapting to that well, rather than trying to like predict a disaster or something else.
Yep. Agree.
Cool. All right. We're prepared for the end times now. We're actually kind of coming up on time. Did you want to do some good news, or what else do you want to do?
Let's do our gratitude then, since it's been a good chat about the end of the world.
I'm grateful to live in Australia. I think, although you say that we might not plan that well at the moment, some of our recent large projects, we might have caught that disease, I still think very functioning democracy. And I don't know, there's a lot of stats, like even, I can't remember if we talked about on the pod, but like the difference in Gen Z, like males and females, how Gen Z males have become like super polarized, like alpha male content, and Gen Z females have gone like super lefty, whatever. Apparently it's not actually in Australia if you look at the stats. And there's like a lot of stats where you're like, oh, the world's going to shit, and you look at Australia, it's not as bad. So I think we've still got a good thing going here. So
I'd say everything's relative, right? Like that's what I try and remind myself of, is that there's plenty of things that in isolation you can say, well, any rational person can look around and go, well, that could be better, or that could be better. It could also be a lot worse, I guess, is your point as well. And when it comes to being a lot worse, there's a lot worse places than Australia. So I'll go with you there.
If you think of I always think of the movie Elysium, with Matt Damon, where the people are like flinging themselves into space to get to this land, and they're like shooting it down. Like that's basically Australia. Australia is a place where people literally are willing to cross hundreds of kilometers, 1,000 kilometers by boat in horrible conditions to get to, and we're lucky enough to live there like every day. And a lot of the developed world is like that, and I just think we should take it for granted what we have.
Yeah, I agree with that. That's a nice one.
Yeah, I'll take that as well. We live in a happy, peaceful society. I had another really weird trite one, but I've forgotten that now. I'll have to save that for next time. No, look, we have a pretty peaceful society. We have our little markets that we walk through on a Saturday morning. You can buy different things. It's all pretty wholesome. Good kind of country. Yeah, I think it also gets a lot easier once you get out of the hubbub of Sydney, I have to say. Now we've all escaped Andrew.
Not a rat race.
Last. So I'll say that, if you're I get it. If you're a super wealthy boomer, like, live it up, mate, or ma'am, you're the ruler of the world, like, enjoy it. But like, if you're a millennial, like, it's definitely a lot easier once you like get out of the very inner cities of Sydney, or even just Sydney, really, because it's like
such a shame. Back in the late 90s, do my boomerish rant, like, you could live like, you live right in the middle of town, like a student-esque kind of apartment, but it was very affordable. It had an awesome scene. It was such a great place, but it's completely priced out now. So it's sort of like, ditch the big cities, I say.
All right, let's bring it back. What are you grateful for, Andrew?
I'm happy I moved to Canberra. There, I said it, guys.
Canberra's beautiful. I'm grateful for non-leaking roofs. So like a lot of people on the East Coast, we had a crap ton of rain recently. We had like something like 20 centimeters in 24 hours at our place, and it was just like, there's going to be leaks, and not a single one. So I was very grateful for that.
Yeah, that's cool, man. And you sent us some video of your stream that you have on your property.
Well, when it rains, there's a stream. Yeah, a waterfall too.
Anyway, speaking of if that less than 1% chance of everything falling apart, I'm coming to your place. That's pretty nice.
Right, yeah.
Yeah, you're the closest we've got so far, mate. Like
we'll put your address
house.
and the details.
Everyone, just bring a lot of food and ammo, and you can come
Bring
into
your
the
own
Citadel.
noodles. Yeah.
No, you have to swear allegiance to like Andrew, and he only accepts Bitcoin.
Oh,
That's right.
All right. I'm all right. I'll take my chances.
We've got shelter, we've got food, we've got medicine. Oh, I'm all in. You have to pay in Bitcoin. No, I'm good.
It's like Matt, like walking with his boys, like into the dark grey future.
Excellent. All right. Thanks very much. Hit us up on Twitter at BabyGiantsPod. Until next time, thanks very much for listening.
Cheers, everyone.
Yeah, have a great day, everyone.